Up next, we have the final panel of the day, the final session of the day. It will be moderated by Jutta. And on the panel, we'll have Olaf, Richard, and Vincent. Yeah, please give a big hand to these guys now. Perfect.
Does this work? Yeah, okay. Oh, it's great to see that so many people are still around. I'm actually pretty happy that this attracts so much interest because I think it's an important topic to talk about, the impact of money and investment on the space, and also general other externalities or external factors that play a role. And I'm really glad that we have a pretty diverse panel from different regions of the world, like Vincent from Asia, Richard here from Europe, and Olaf, who came all the way from the US to talk about all these topics. And I think Ryan's presentation gave a nice backdrop. So I guess if you're a builder and wondering whether you should take institutional money or how you should structure your project, this is for you. If you're just in general concerned how this is going to play out, this is for you. And if you're maybe an aspiring investor, maybe this is also for you. Maybe we can get Ryan's sort of disclaimers on here. So this is not general investment advice, but feel free whatever you want to do with what we discuss here. Cool. Maybe to start with, so I'm wondering, so there's a lot of technological and pretty exciting stuff happening in general. So there's AI and VR and whatnot. Like, why is it that you are in blockchain, and what is it that you think about the space, or what your investment thesis is, that is different from everybody else here on the panel?
So I'd say the reason that I'm so interested in cryptocurrency as an investor is that, to me, a lot of the work here is bootstrapping monetary systems from zero in a totally open source way. Where it's opt-in and interoperable and permissionless, so anyone can build anything they'd like. To me, if it plays out the way I think many of us in this room think it will, it's likely to be the greatest investment opportunity humanity will see in this era, definitely in my lifetime. So to me, I think being an investor, I could not imagine another thing that has more upside and that is more exciting than investing in the cryptocurrency space. As many of us know, this space kind of moves like dog years. Like 3 months in crypto is kind of like 2 or 3 years in the rest of the world. And so having to stay on top of everything and continually track what matters is, if you're into it, it's very, very fun because there's a lot happening.
Cool. Richard, what do you think?
Yeah, so for me, I'm old enough that there was a cover of The Economist in '95 that I saw that had a kind of Zeus or Atlas type figure kind of reaching across the globe and proclaiming the death of distance because of the rise of the internet. And I think we've seen time and again in some of the talks today how there's the promise that crypto and Web3 can bring kind of the death of the despot in all its different forms. So as a movement, that's obviously terrifically exciting. On a more practical level, having tried to build companies the last few decades based on open source, you've got this unique situation where you have this tight coupling between a means not just of funding, but also of kind of bootstrapping these new networks built on open source technologies. That's something that I didn't have for a whole bunch of time in trying to build companies. So when you take that and combine it, I think it combines very well with AI and with Internet of Things and so forth. That makes it a pretty exciting wave to be investing in.
What's sort of unique from an Asian investor's perspective?
And I jumped in space began with Bitcoin trading, but I think early next year, and I suddenly find maybe it will something change in this industry. Maybe this is a next wave of internet. So I jump in space and also put money in space and also learn from other guys I peer in space. And I try to be someone behind this next wave, if it really happens. This is the reason.
Are there any particular layers or classes of tech you're interested in? I mean, obviously with blockchain there is this sort of blurred distinction between infrastructure and app, sort of what Ryan already mentioned earlier, but is there particular things you're interested in at the moment?
You know, I do think we're kind of in this era of moving up the stack, so to speak. I think that for a long time we were just working on improving underlying protocols only, and while that work continues at a fast pace, I do think that for the first time there's enough users broadly in the cryptocurrency space to start making smart contract-based businesses viable. So I do think in 2017 we saw the emergence of things like the 0x protocol and many of the extensions of that token trading protocol native to Ethereum. I think we're going to see more and more decentralized corporate structures, so like DAO-type structures that where capital can be coordinated all around from all around the world on the internet, where we see many types of property ownership ported onto the internet using blockchains. And that whole new kind of financial system is all totally interoperable, permissionless, and extensible. So I do think you'll see kind of radical experiments emerge as kind of a remixing of all these various smart contract units. I do think we're very far, it feels to me, from your, quote, average end user being able to interact with these systems in a meaningful way. I do think that the user experience today, many of us probably forget, is pretty abysmal. And it's filled with all of these tricky concepts like public keys, and most people get really scared by those types of things. So while I do think we're moving up the stack, we have a ways to go until we're at the kind of standard normal user.
Yeah, so I don't want to repeat what either Olaf or Ryan has said too much, but I think within the stack itself, we continue to be excited by the potential for a decentralized form of identity. I think that doesn't come without a kind of an app, and people don't adopt an identity just for the sake of it. And kind of building on my personal experience in the whole kind of DevOps and cloud automation space, I think that, and I've spoken to a few people here already today, building better tools for devs to build out these apps themselves. So putting that to one side, I also agree that we can't operate on the basis of the field of dreams. Build it and then suddenly the user will spring from nowhere. And so we do see people being incredibly smart about how to apply the concept of self-sovereign management of data to, for example, the healthcare environment, and how to apply kind of self-describing smart contracts to the supply chain space, where actually there's a surprisingly large amount of deployment already going on with some really quite large companies, as well as some great innovation taking place, including here in Berlin.
What are you looking for in a team? So what's the right founder market fit in the space? I mean, obviously, like a lot of projects are very researchy, but is there a particular thing you're looking for?
For me? Okay. Besides the protocol level, and we are also looking at the financial industry, the trading, lending, and all the kind of it's straightforward to build on a blockchain and can cut the middleman. I think maybe makes sense for the adoption right now. This is basically the field we invest in beside the protocol. I think.
Anything in particular you're looking for in a team?
Well, in terms of
actually, like the product, like the founder market fit.
Yeah.
Specifically.
So, I mean, first of all, I'd say that we try and as much as possible, and I've been kind of investing now for 10 years, having sort of tried to build stuff before that. As much as possible, if I've learned any lessons, of the last 10 years, is that to coin the phrase, you really want to back the jockey more than anything else. So that founder market fit and the strength of the founder is supremely important. We use the word relentless to describe the kind of founders that we're looking for, to the point perhaps of recklessness. If you're not prepared to really have that characteristic, then you may not have what it takes. But then beyond that, in terms of fit, I mean, maybe. And it really brings us maybe to another point. You can tell us if you want to cover it another time. But that we're in this funny situation with this particular market, because you have a lot of sort of deep tech research going on, at the same time as having this urgency to get to market and create great product and go to market and scale, at the same time as not just doing fundraising, but actually doing kind of public markets fundraising. So that really doesn't normally all come at the same time. And so I think it requires some thought to make sure that you don't get confused as to what your real priorities are, and we don't try and do everything at the same time, which generally tends to be a recipe for poor execution.
Is this also where you try to be helpful as an institutional investor because of your experience with all these different stages that maybe many people lack here in the space?
Look, I mean, the first thing I've learned about trying to help, or I certainly thought was the case when I was an entrepreneur, about helping as an investor, is to try not to fuck it up, because I think you can do that. But aside from that, I think you can be helpful. Over and above, Bill, I brought you a piece of cold pizza earlier. I think we need to do better. We need to do better than cold pizza. But I think talent is definitely helpful. That's the gift that keeps giving, if you will. If you can really help tee that up, because I think it's not helpful to be trying to be backseat driving. Mm-hmm. If you can coach somewhat, that's okay. But you have to accept ultimately, you're backing the people. But yes, some experience of those different stages and acting as, what are the proverbial sounding board, hopefully is useful. I've certainly lots of mistakes to lean upon, yeah.
So the notion of backseat driving is interesting because, like, in the VC world, like, it is common that investors take a board seat and whatnot. Like, how do you see your role then changing going forward? Like, how do you try maybe to exert some more explicit influence? Is it through earlier investments, like in the SAFT model, or what sort of the approaches you're thinking about?
So I think a new model that has really emerged due to crypto technologies is like having a voice in the community. Because I do think when you're dealing with peer-to-peer protocols, I think it would be very bad as an investor to have any sort of unfair treatment relative to other users in the peer-to-peer system. But of course, there are real questions about how to change or improve peer-to-peer protocols that can be quite fraught. As we've seen historically with things like Bitcoin and Ethereum, there are really hard decisions here. So I do think as an investor, increasingly you have to potentially help the project in a kind of public sphere. It's no longer the boardroom, it's really like the blog post, so to speak. Mm-hmm.
I think that's a good point. And I think whatever sort of strand of help that venture firms try to give to projects, this isn't new. I mean, venture is like, say, 50 years old. Certainly over the last couple of decades or decade, people have taken up the kind of more 360 support for founders, inspired somewhat by kind of the whole Andreessen Horowitz approach, but also built venture studios and so forth. And indeed started doing some of this more public support for their projects rather than just sitting behind the scenes. But I think in this space, one could take it a step further, and that we do see that the area of, and we were just hearing from Trent about Ocean Protocol, that this whole area of possibly actively participating in networks, and we also heard from Ryan about the importance of being able to experiment with the ways in which these incentives and token economics are going to work. Participating at that level, I think, could be pretty crucial. Some people call it generalized mining or mining to row and so forth. Mm-hmm. I think that's going to be a new part of what is necessary to be an excellent partner. Mm-hmm.
I think it's to be the middleman of the public in the project, and also sometimes, as myself, sometimes at the bridge for the Western to the Asian to the West. Sometimes, so this is maybe another law, not as a board on a company, but you put your reputation on project. Sometimes, especially at the early investors, sometimes when they're very small, you need to be part of a team to talk to the public. Until they get a mass adoption, or a lot of people know them, and you disappear. Just as I've said, you're just a token holder as others.
That's an interesting point. I get approached a lot recently by politicians, regulators to give opinion on the technology and like what regulators, lawmakers should do. But like obviously when you run a company and build a project and whatnot, like your time is limited. And is that something you're considering, like helping the space? I mean, a lot of the regulation is not just financial, like securities and whatnot, but also it's the payments directive in Europe. It's all the different privacy regulations. Is that something you're trying to help and get involved as well?
Yeah, I think so. We've made donations to Coin Center as well as the Blockchain Association, and I do think that this space has actually underinvested in kind of lobbying and educating regulators. I think one of our big messages has been that this technology, by virtue of it being peer-to-peer, extremely anti-fragile, is somewhat inevitable, and the value can either accrue to your jurisdiction or not. And it's kind of going to happen somewhere. And I think that censoring it would be sort of like censoring the early internet. It would be quite dangerous, and I don't think there's any, at least in the United States, I don't think there's any assuredness that the kind of next Silicon Valley is in America, right? So I think we try to take a pretty active approach talking with regulators.
So, I mean, absolutely hats off to the likes of Coin Center and other folks who are trying to create that dialogue with the regulators and so forth. I guess, we're not at the stage where that's been high enough up our list of kind of priorities to kind of proactively do it, and it can be very time consuming. I mean, giving a donation is probably the scalable way of doing it. And also I'd pick up on the point Olaf made actually that I guess we're trying to focus on helping foster success in different projects across Europe, and then rely on the fact that especially in Europe, you have that jurisdictional competition for different geographies to attract those projects to their particular area, and therefore, the kind of onus is on the regulators then to try and do the best job that they can. I think the third thing I'd say is that there is arguably a kind of quite a different approach to the way in which data is handled between, say, the US and China. And there are some people who think that GDPR here within Europe is an interesting kind of stepping stone to a kind of if you will, a third way in terms of the way in which data is managed and how you set permissions for self-sovereign ownership of data and how that interplays with the whole AI movement. So that's not so much to do, well, it's on the data side and privacy side of regulation rather than the kind of financial regulation.
Yeah. I do remember that in the early days of Ethereum, we sometimes said like blockchain is the most compliant and also most non-compliant technology. So I'm wondering, like, especially in China, like how's your work, or do you work with the government regulators to try to steer that discussion?
Frankly, and in China, for us, we did not work with government regulator, but we are carefully look at the regulator in Japan, Korea, and in Singapore, and we will help the team to regulate there, but not in China. In China, I don't think it will be some regulator come out very soon. I don't think, and also we actually talk to other. In the EU and the US, other regular issues or the guidelines where we will sync with the team. Yeah, maybe this is a response to the question.
Mm-hmm. In terms of like your funds and like long term, how do you manage like the tension between fiduciary duty and the project needs? So especially when it now comes to like the projects deeper down the stack that move to proof of stake and whatnot, like. What are your thoughts and approaches?
So it's going to become increasingly important for investors to have active participation in these protocols, particularly when there is built-in voting or governance or staking or things like that. So we today are running the largest staking node in the world on Tezos, and I think it would be irresponsible for us, both as an investor to the founders. But also as a fiduciary to our investors, to not kind of participate in that manner. This would be like being a very, very large shareholder of Apple and like not showing up to the shareholder meeting, right? And when you're talking about block rewards or endorsements that can be earned from staking, this is not insignificant either.
Yeah.
And so I think that we're probably not quite at this point, but I think investors in crypto investment groups will increasingly start asking, like, what is your perspective here? Are you participating in XYZ network or not? I think that the norm will become that you have to.
What are the steps you're taking in the teams, building up technology teams to help you stake, or are you working then with third parties, or how do you manage?
We have a team to do this kind of stake to help after we invest in. If the team project could mature, and we will actively participate in these activities to support them. We also have some investment opportunities if the money come out, and if they need help, we will continue to support them.
So yeah, similar approach to what's already been described, and we had a small blog post about the work we've been doing with Ocean, actually, that we published a few weeks ago, and we're going to continue to build that out. And indeed, something that's relatively unusual for venture firms, just to have developers and data scientists or whatever on the team. I think, again, it had already been moving in that direction, but this is like real, gives it a kind of push over the edge, and people, I think, need to commit if they want to be operating in this space. I think that should create a very strong alignment between not just the project but the community and the investors. And I think that's good. And who knows what is going to happen, obviously, in terms of the pricing of tokens going forward, but hopefully that will mean that the alignment is retained, even if you end up with sort of huge spikes in price over time. But what we saw in this last spike is it's pretty important that there are a new set of considerations that you have to have in dealing with your portfolio, like understanding actually what's going on in the treasury of your portfolio as you're riding sort of some of those price volatility spikes that don't really exist in the early stages, of course, of venture normally. That's a new factor.
Do you help projects do treasury management when they are post-ICO and like have...
Sure, yeah, plenty of treasury management, obviously deciding to sell more of their own native tokens, but also clearly deciding to sell out of a particular cryptocurrency in order to put it into fiat, because at the end of the day, they have different volatilities attached to them still, however much you believe long term. I was going to flip back to this question of, you said Ethereum was both the kind of least regulation
well, just
friendly.
In general blockchain, I guess, because you can hard code rules, but at the same time it's decentral, so you can't take it down.
Yeah,
so.
there's definitely that tension. I mean, I ended up in the back of a van. I was stuck trying to get up a hill, and I ended up in the back of a van with a bunch of journalists earlier in the year. And I told them, apparently breathlessly, that I thought that the kind of crypto capital markets were going to crush traditional capital markets. But I basically sort of feel that. It just seems to me that the characteristics that you have, the ability to make it auditable, transparent where you want it to be and not, and to automate things and so forth, are all characteristics that people wished were the case for not just capital markets today in general, but like for accounting, for corporations. So I think it's not going to happen overnight, but over time it's going to become exactly what the regulators have dreamt of, and what even the government and the tax man has dreamt of. And so, of course, that's a great opportunity, but also therein lies something to navigate. And once everybody realizes how exciting that is, it's going to have its own, challenges.
In that direction, one other thought I've been thinking about lately a bit more is like the notion of activist investors in the space, so which sounds like a nice term, but it's like somebody who buys a big stake in order to change the rules of like what used to be companies but now networks. What are your thoughts on that? I mean, like in traditional systems, there's sort of warnings where if you buy more than 5%, you have to file a certain form to the SEC, for example. I mean, here maybe we have some metrics, but then they're gameable. Like, what are the steps we need to take?
I mean, I think these systems have to be designed in a way to be quite resilient to people doing all matter of sorts of things. I do think, we already see today a lot of infighting, unfortunately, in the cryptocurrency community. And I think a lot of that is, at the end of the day, financially motivated. I think it's people perceiving there as being one sort of pie, and let's increase the size of our slice by attacking other projects. I find that sort of myopic, given how early we are in this whole experiment. But I do think we actually see a form of that today with projects attacking other projects.
I mean, I would kind of hope that what goes hand in hand with the transparency that by and large exists, and the kind of community ethos that one's trying to develop across the whole movement, but also within each, say, different digital ecosystem, whatever, that you could have some kind of emergent governance that forms. I mean, I'm not going to try and work out how they should regulate for activist investors and what the thresholds should be. Somebody, I'm sure, will apply their minds to that. But if you're a bad actor and observably a bad actor within a given network, you probably won't get invited to participate in the next one, or they'll decide that they're going to blacklist you. I'm sure this can be gamed as well, but I mean that should be part of what we're trying to build here. But I think actually the flip side of that is, I think that you are meant to have open communities, and people are meant to have, and entities are meant to have voices as to what they believe is important in a given new ecosystem you're building. So, you might call it an activist, but it might just actually be someone who's got a different opinion, and so we need to be open to that too.
I think, for us, in general, we will control a person in the project, but there no regulation and no one guidelines what kind of person is suitable. So this, but I think for project, it's transparent is the most important thing, and especially for the early investor or big investors, and to the community know. And I also listen some argument for this. I know for listing changes or for the investors or for committee, I think a lot of argue here, and I did not have a conclusion here. But generally, for us, we will generally keep proposing in the project. And if some guidelines come out, maybe we'll follow up. But not now. I think no one have the idea.
Yeah. How do you think? Like in general, the excess of money in 2018 or end of 2017 has affected the space. I mean, obviously, you also have to deal with like really high valuations and making choices. What are you thinking? I mean, how do you decide on at which valuation you would invest in a project or not?
So I think this will probably only get worse over the long term. Mm-hmm. I think that people have yet to really understand how valuable, especially on the magnitude of upside, there is when you can kind of bootstrap a money system from zero. So I think that it's kind of a new, everyone in this room knows this, but it's kind of a new asset class, and I think we're only now figuring out from first principles how to think about pricing. So it's not that unsurprising to me that a lot of the world has realized that this could be really, really valuable. And so then the very high potential projects get appropriately extremely kind of high valuations that from a traditional venture perspective you might view as kind of eye-popping. But I think that the upside is way, way higher than some food delivery app, right? This is just a completely different type of project. So to me, it's not that surprising, and I actually think it will get a lot worse over the next kind of 5 years.
It's super interesting to hear that, because I'm so inherently an optimistic person and quite happy to get overly exuberant about any given company and the rest of it. And I agree that if you look at it clearly, there's some more fundamental work afoot here than just a quicker way to get a cold pizza delivered to you. So I agree with that. But at the same time, I try and take a little bit of a sober look at kind of valuations, and therefore we have seen obviously valuations come down at this point in time as the ICO and token sale market has sort of died down a little bit more. And I think there is still work to be done, clearly, to kind of get to the point where we have models at all, really, that we can apply on a valuation perspective, let alone models where we kind of really trawl through a bunch of data from experiments, from scaled growth and the rest of it to support those valuations. They're starting to emerge now, but we're in that phase. So I think that makes it harder to obviously justify valuations other than on kind of I get it, I grok it, I have faith kind of basis. But I mean, I do agree though that we were talking about a little bit earlier. I think ICOs, token sales, or whatever, this has not gone away. That separate source of capital is still going to be there, and that both changes what you have to do as a venture investor and changes the cost of capital to these projects, and therefore has an impact on pricing. So you better get your head around it, otherwise you're not going to be able to participate in any of those projects.
So obviously, the monetary or like what we call valuation is a pretty obvious metric because it's a crypto economics system. Like it's inherently related to what we're building. But I'm wondering, like, what should actually be the metrics we should optimize for? Like, if I look back, I mean, there are a lot of things that went wrong with Web 2, and some of them it might be possible to create I hope it's possible to create a better web with these technologies that we have that actually have a technological backstop. But then decisions like introducing the number of users as like a valuation category in the Facebook IPO definitely didn't help with preventing the mess we have right now. Like, what are your thoughts? Like, is there any particular thing we actually should keep in mind? I mean, obviously metrics can always be gamed, but...
I think one I worry about is basically distribution of coins to the number of users. If you measure this with like a Gini coefficient across the cryptocurrency ecosystem, it's not very equitable, I would say. And I think that over the long term, if this goes the way many of us in this room think it will, and this is worth trillions and trillions of dollars, we're going to see most of the world's billionaires be created due to cryptocurrency. And I think that we need to think really carefully about if that happens, are we going to be responsible if like this is the future monetary systems of the world? Those people that benefited disproportionately, I think it's really important that those folks think about it really carefully. Like, what kind of world do they really want to see? So to me, I think that a more equitable distribution, and this goes hand in hand with trying to solve the problem of coin distribution when you're bootstrapping a network from zero, which is a really hard problem. I think a lot of people don't necessarily realize that one of the big pushes behind ICOs was the fact that people were trying to bootstrap proof-of-stake protocols. Because you can't start a proof-of-stake protocol from zero like you can a proof-of-work protocol, where you just go let people mine the first block. You actually need to come up with an initial distribution mechanism. And so like with Ethereum, that's proof-of-work. But with other types of projects, they actually kind of had to do some sort of ICO-type structure in order to distribute the coin, in order to launch with a proof-of-stake consensus mechanism.
And it's really frustrating that sort of the regulation that's in place prevents you from achieving a more equitable distribution.
And exactly. And I mean, this is, while we use the SAFT-style agreement a lot, and it's private-style fundraising, I actually much prefer this structure ideologically of like anybody in the world can participate. Because I do think that the ICO in its traditional form of kind of like everyone comes to a web page and just like send Ether to this address or something like that has faded. But I do think that that is the most efficient capital coordination the world has ever seen. And I do think in some form it needs to come back. Because I would like to see that become, over time, the way that fundraising happens. And I don't just mean for cryptocurrency projects, but for everything. I think one of the problems is, as always, there were a lot of bad actors that took advantage of the ICO structure, as everyone knows. So I just think there needs to be kind of a balance there, but it's a very, very powerful tool for initial distribution in a relatively fair way. And I think that really matters.
The valuation is tricky, and And there's no financial model for the token sale, and this is also frustrate a lot of traditional background guys jumping in space. They are looking for the model, and I from an investment side, from not from how to as we were active study the project, listing on the process of the project or all the project, gonna come back cap, and we will compare this project and do some research for the project and to compare valuation to the new project, and it should be some price protection for the soft investors. This is one way. Another way is for the valuation is I think it's also the requirement and the money. If the money more money in the space, and as well will be high. And this is I think for investors you should be this I always said you should be aware that it's a high volatility market. If you are over optimistic in the valuation, and maybe you will kind of wait for the one day the crypto adoption everywhere. You will already die in some space. So so for us, we are very careful for the valuation. If the market very optimistic, we are waiting for the market to become more stable and put the money in. This is another way for how can we see the valuation.
So I mean, I think I also, as I said before, I think token sales are going to come back and probably with a vengeance. And I think philosophically, I think we need to get over somehow this reluctance to allow everybody to participate in these opportunities. And I think it's significant because we need to continue to disrupt the asset management world to stop it being a situation where there's a very small percentage of the world's capital that's actually deployed to try and make the world at all better, and the rest of it is sort of managed by people who are just paid to try and not lose it. So I think that's important. I think the incentives you get, or kind of the financial return you can get from participating early in a token sale and in a given network, as the proof of stake is bootstrapped, is one part of it, and that's one metric, the value of the token, should we say. But I do think it's an interesting point about what happens in the next phase, because if the only metric is the value of the token, then I'm not sure that you're going to build the benevolent network or set of products. And I earlier saw some of the talk about how to design, DApps. I mean, like, product management is like super hard, trying to work out how you build a great product and how you think about the right things. And I don't think, should we say, that thinking about let's make this decentralized is the right objective. What you need to do is to go to a specific context, situation, scenario, and understand what is the very specific benefit of decentralization, and do that in a fantastic way. And then ultimately, hopefully, that will get reflected in the adoption by users in your network.
Before we open to the audience, is there any big learning you want to share that you've had in 2018? Maybe think about it, and we'll open to the audience. I brought some T-shirts, so if you have a question, you get a T-shirt afterwards. Any questions to the people here? Yeah.
The T-shirts did it.
Yeah, I have more. Like I can take more questions. Yeah, you have. Okay.
Thank you very much. That was a really interesting panel. I just wanted to ask each of the panelists individually, what has been your best trade of 2018? So your best performing investment in 2018.
The question was, what was the best performing investment in 2018?
Yeah. In your portfolios, what's been the best trade this year?
Best trade.
Vincent?
I think Tether.
Or least bad trade, maybe that's.
I think Tether. And we have big position in Tether after the crash. And I trust Tether to come back.
Yeah.
Okay. Hello.
It was to each, so we might as well.
Yeah, maybe I prefer to have more questions than.
Okay,
Okay,
let's
yeah.
roll. So I know most of you. Hello. But anyway, I just
Hi,
want
Ken.
to question. Hey there. When money isn't the problem, blah blah blah. I want to dig into that. There's kind of a couple of suppositions in that. Hello.
Actually, maybe money is the problem.
Maybe it is the problem. But what I mean, when money isn't the problem, there's lots of crypto companies, whether they're ICOing or giving up on the dream or doing it or whatever, that they would be delighted to hear that money isn't the problem. So my question is, to what extent do you think that sentence applies to most companies? So man, I'm not saying this direct enough. When money isn't the problem. For most companies, is raising money a problem? Or are you all assuming that most crypto companies have just no problem raising money? That's kind of my question. Does that make any sense?
I think that there's a lot of capital available for high quality projects.
Okay.
So to me, I think what they're trying to get at is to distinguish yourself as an investor in this particular industry. I do think that it takes a lot more than just saying, I have money and nobody else does.
Right.
So I think that, when you have a high quality project, I do think there's an abundance of capital available.
What I really mean is, are you
One
only,
question.
Are you only talking about the top companies?
I mean, it's a power law distribution, like most things. So I think it's especially true in kind of an exponential way for the top projects.
Yeah, the impression I get from hearing what you said is that you think that this asset class has amazing potential, but in terms of that to happen, would there not need to be institutional money investment coming in? And what about problems such as credit risk and KYC, know your counterparty? I've heard that these represent significant barriers towards institutions getting involved in this space.
I mean, yeah, I do think that as a category, traditional institutional investment has been very hesitant to get involved with cryptocurrency for a whole host of reasons. I think it's really volatile. I think that from a regulatory perspective, it's quite uncertain, to say the least. I think it's very esoteric technically and hard to understand. I don't think that there are real use cases that make sense for the average person. So today, to me, it's kind of unsurprising that those traditional pools of capital find this uninteresting.
Yep. Yep. Oh, yeah. We have the cube up there, so we maybe continue there. I guess we're the last session here in any case, so I think we can maybe run a bit over
for
time.
each of you,
yeah?
if you could,
Well, 10 more minutes? Okay, yeah, we have 10 minutes.
If you could cite
so
a
no
project with good token economics and governance, what's the best projects you see out there?
I continue to think that one of the projects really asking the right questions about governance is the MakerDAO, which is working on the DAI stablecoin system. I do think that this idea of a DAO or like a decentralized corporation is going to grow substantially. And I actually think that people will start to build what look like corporations on blockchains instead of basing it in certain jurisdictions. And so as this trend moves further along, I think that systems of like voting and governance and are going to be critical, right? And I think a MakerDAO project is probably among the furthest along in thinking about that.
There's a question
Here.
there.
Here.
Can we get where's the?
Here?
Okay. Okay.
Yeah.
We'll come to you eventually.
I'm having a feeling we are in a honeymoon period, and this in relation with the internet.com bust that happened near 2000. So I'm afraid that we may go into this period again with blockchain technologies and its relation with cryptocurrencies. And I'm wondering how can we go through this stage without being affected too much, and what will remain afterwards if it happens, because at some point I believe that it may happen.
I mean, go build some DApps is probably the best thing to go and do. But I just want to say, I mean, I'm not sure how old everybody is, but having lived through the up and the down of the dot-com boom bust, I mean, first of all, I think, calibrate it. It was like a 10 times bigger a bubble in terms of the financial markets than this was. It was also at a time when there was like, whatever, 100th of the number of people or whatever actually using the internet, depending on how you want to kind of measure it. So you could say that it was like many 10 times bigger in terms of a bubble of inflated expectations. And it also affected directly kind of lots and lots of kind of retail investors who thought they'd come in through kind of a regulated financial services system and then kind of had lost money. So there was just a much bigger impact. I think a bigger challenge for us, and the answer is still probably go build some DApps, is that we've got a lot of high asset prices across the economy as a whole. So you could end up having a big recession of some description that might also make life difficult.
Okay, I'm going to manage this now a bit more actively.
Thank you. The question is about for what advice would you give to projects in terms of listing options? I mean, now the market's not doing super well; it's kind of bearish. But I think the good thing is you have less competition and more negotiation power with exchanges. Well, some projects argue that they want to wait for the market gets better to get listed. So, want to pick a brain from an institution money's perspective. How would you advise your projects in terms of listing and the market situation?
Don't list unless you need to. Wait.
I don't know. I feel like liquidity matters, but it will come second to like success. I think that it can be a very much a distraction, and it's a short-term thinking to say, let's just get listed and that's success or something like that.
Yeah.
Okay, next question.
When we talk about the blockchain startup, we know that there are two types of asset, if I can say so. I mean equity and a crypto asset. How blockchain startup should structure itself, and what do you prefer as an institutional investor, equity or a big stake in a project's crypto asset?
For us, we generally did not invest in equity. If it were issue a token, I think it's not fair to the token holders if they have equity beside the team.
Yeah, I would say broadly, if it's not extraordinarily obvious why a kind of crypto asset could accrue value, it probably shouldn't exist. So to me, I think that there's been a healthy push back towards projects that should have been just regular old companies in the first place, actually raising money as a company instead of creating a token.
Yeah, I mean, we've got to look. Our duty to our investors is to look very critically at where value is going to accrue, and to that point, if it's not going to accrue in the token, then maybe the company should just issue equity. But we also have slightly different strategies sitting around the panel here. From our perspective, we believe in this kind of broad wave of computing, and whether it's equity is the right place to invest or tokens are the right place to invest, we don't mind, or it could be some combination of the two, and do that as early as possible, and then hope to be a good partner to the project.
Please take the microphone really close to your, although it's a bit awkward to speak into the tube.
Can you guys hear? Oh, this is pretty good. Okay. I also run a venture capital firm out in South Korea on the same issues. One of the biggest questions we have is, and I think Ryan spoke earlier, said ICOs are disrupting venture capital. And then you look today, and it feels very much like venture capital. Valuation-wise, it's in the Bay, I'm sure you know, it's I got in 5 times cheaper than you, I got in 10x cheaper than you, right? And then with Matt and Fred coming in with $400 million fund, and Katie and Jesse just putting $16 million in MakerDAO, I feel like there's going to be a ton of growth around as well. And it might be because projects are looking for more strategics, or maybe they didn't do treasuries that well, because that was a topic of discussion as well. So in a lot of ways, and I wanted to get deep, this is a deep question that we have over in Korea, are we going back into kind of venture land again, but with new sets of younger, different people, or do you think it'll kind of come back to reality and maybe we'll see kind of this open public fundraising structures again?
I mean, I think there are cycles. I hope we are not just recreating the traditional kind of venture industry. I do think that the venture industry broadly is the way society distributes resources to unproven technologies. That's a really big deal. So I think that disrupting that, as you said, should take a while. I would be really surprised if it happened in 1 year. So I do think that we also need more advanced structures. So I think a lot of venture funds could likely be disrupted by a kind of decentralized corporate structure. So you could pool capital and have underlying owners actually decide how to allocate that capital. So I think it will take a while, but I do think that venture will continue to see significant disruption from crypto fundraising.
As I said, I think venture had already begun to kind of reluctantly disrupt itself, but I think this is obviously a pretty big sort of trigger for speeding that up. And we're in a certain part of the cycle, but I think it'll accelerate it again.
It's good.
Yep.
I think venture some venture will become like us. I think in the someday if they really want to jump in space.
Quick question, Mike Butcher from TechCrunch. Where are you guys looking at the jurisdictions with the most forward-thinking domiciled regulation? Malta, Gibraltar, London, New York, Seoul, where?
I think in general, these are the jurisdictions that have been friendly to financial services traditionally. So, Malta is a great example. I mean, it was that kind of HQ of European online gambling before it kind of pivoted into blockchain island. So, yeah, I think it's broadly those jurisdictions. I actually think that things are playing out. I'm optimistic about the way things are playing out in the United States as well.
So, I think if you're optimizing just for your kind of regulatory jurisdiction, maybe that's shouldn't be the kind of primary focus for any given project. So I want to kind of give credit to Europe, where it's due that there is incredible talent out here, somewhat more distributed than arguably than both Asia and the US across different cities. London was at the end of Ryan's list, but I think London, Paris, Berlin, Switzerland, and a lot of places across the Baltics and the Balkans and so forth. And I think talent is kind of always the number one determinant of success, and you should focus on that. But then in terms of regulation, of course, I think Europe also has this advantage of having the battle between the different geographies to attract these different projects. So I think all of the names that have already been listed are pretty amenable.
And from my side, I'm still waiting for more clear in the US side for the regulation. And maybe I paid small attention to other regions. And if the massive adoption, I think, will come from US, if they're more clear. Right now, I think it's already clear for Ether and the Bitcoin, but there something will come out. I don't know when. Just pay attention to the regulation.
Mm-hmm. The industry as a whole seems to see that institutional investors are coming. Is that a good thing for the crypto space, in your opinion, considering that our background is a anti-establishment, reconstruct the financial system?
The goal to me is to funnel, all fiat currencies into cryptocurrencies. So by any means necessary, I think.
That's a yes, I think. I mean, it's slightly sort of one step removed from, I think, where we're mostly focused on the early stage. I mean, I guess we have institutional investors, although I can't speak for everybody. So it's clearly they're making the jump. But in terms of kind of the big names investing in publicly traded tokens and cryptocurrencies, obviously further towards the end of the cycle, the more that they can get ahead around the new crypto capital markets, the better.
In my opinion, in the long term, I think just the money. I think maybe just the big checks jump in space. I think in this space, I think who gave the money is not the most important thing. Just the time. And if we believe the blockchain space will become next big things, I think all the money will come in. Just my time. Maybe in the short term, maybe some big names jump in space, maybe change something. But in the long term, I don't think big money will make sense.
What are your personal philosophies in investing in multiple projects in the same space, so even if they are competitors?
That was a question I had as well. I didn't ask that.
Yeah, I think it's a little early to even call things competitors. I think that these are many different experiments in the same area, but I do think the upside right now is the pie getting bigger across the entire industry. I mean, this is what has happened throughout the history of cryptocurrency. It's just grown significantly. So I do think while projects can overlap in the kind of user base or developer base they're targeting, I don't think it's the same as kind of two SaaS companies making the same software trying to sell to the same market. I just think it's a bit of a different dynamic, and it's too early, I think, for it to be strictly competitive.
I have 3 more T-shirts. Further questions?
Yeah, so my question is, a lot of these utility tokens have extreme volatility, and for markets to effectively function, you'd like to have your main method of commerce be somewhat stable. Do you see the extreme volatility affecting the success and adoption of some of these projects? And if so, how do you overcome that?
Yeah, I think it depends on how you're using these cryptocurrencies in your system, right? If it's a lockup for 3 days while an e-commerce payment transaction settles, then volatility is quite bad for that type of application. So I think it really depends on what you're doing. I do think we'll see more and more stable coins be baked into the way these systems work.
You said these companies overlap each other in the same platform or system. Do you see ever 2 companies merging each other? And what happens to the tokens if they would merge?
I do think we'll see network acquisitions or mergers. I don't think we've seen that yet, but it's possible using actually technology like Polkadot to build a kind of cross-chain bridge, so to speak, but not really a bridge, more like a slide. Like once you go down it, you can't go back. So I do think you can do that, bake in a fixed price, and theoretically have one blockchain acquire another blockchain.
Yeah.
Hi. Yeah, thank you. Can you name...
We have more T-shirts, by the way. Like we can keep the questions
Can you
coming.
name top 5 really working DApps that you can use now, except MakerDAO DAI, of course?
We have a big user problem. I mean, I don't know why they're not. Why? I mean, most of the real profits in this space are still being made by people, who were formerly spread betting and now are speculating, and that's driven prices up, and people haven't built products that sufficiently elegant in the way in which they solve problems. That's hard to do.
The other thing I'd say is I do think people think about use of applications using a Web2 lens often. So I hear about DAUs, like daily active users, monthly active users of DApps. I think that's kind of a weird way to view financial products. So for example, like, am I a daily active user of my mortgage or of my bank account or of my student loan or something like that? I think it's kind of an odd framework. And I think it's very true. Like, so for example, if I'm passively just holding the DAI stablecoin, right, am I a daily user? It's kind of an odd way to think about measuring it. So I think that's very much a Web2 lens to measure these things. I also think that not that many smart contract systems need to be useful for the whole experiment to be very useful. So for example, thinking about a stablecoin, I don't think a lot of people have thought through the implications of, in the very long term, of how big of an idea that is. I mean, this could become kind of the global way that wealth is stored, right, is in one of these stable assets that's kind of a basket of every other asset out there. So yeah, I don't think that we need like thousands of, quote, apps that we think of like websites in order to work.
I mean, so I agree with what Olaf is saying. I guess one of the things is that we focus much less on that sort of, if you will, the kind of money side of things, and more on how can you build something that existed in Web 2.0 now with decentralization. And I think a couple of thoughts on that. One is on a kind of enterprise level. I think that, as I mentioned earlier, there's actually quite a lot of interesting pilots and traction on rebuilding, back-end processes for large companies, which are also DApps, but they're just a different type of DApp. But I think people aren't necessarily sharing that much information about that yet publicly. And on the other side, I still see immense potential for, for everything from personal finance to social media or whatever to have a decentralized approach to that. But you've got to build a super consumable, highly usable app. Plus, I think there's this still, if we want to give power back to individuals, have them have self-sovereign control of data and the rest of it, actually working out what you do with that power and how you set permissions and how that whole works, I think we're still at the earlier stages of that. So it's kind of not surprising to me in some senses that we haven't just had some of these take off.
And I think right now that if you see the DApp on the blockchain, I think only the trading-related activities really use. If you're trading on some exchanges, maybe with some tokens, or lending some lending you pay some tokens. But I did not see any other areas to massive adoption right now. Yeah. So this is also the reason why I trust the kind of part of the Wall Street will be built on blockchain. I think it will come out very soon. Or you come out first, then maybe the app later, I think.
Okay, I think we have to move the remaining questions to the AMA
yes.
space
Thank you
outside.
very much. Yeah, doing the can.